What's going on with the triangle? Well, I'm a very old school trader. I was raised from the time I was a pup as a Wyckoff technician. I obey the Wyckoff price cycle and the laws of supply and demand. And this is the methodology we use for trading both intraday and swing. So we have a bottom-up approach where the first thing we really focus on is market structure. Market structure is, the market profile itself and the price action structures the markets develop throughout the cycle in terms of accumulation, markup, distribution, and markdown. And then price action is really important, right? I always tell everyone, forget so many indicators, okay? The ultimate indicator is price. Price tells you where the auction is at, what the supply and demand picture looks like, and where things are most likely going to go. Some of the world's most proficient traders, most successful traders, don't really look at a whole lot of indicators. What they're looking at is price. Where are the bids at? Where are the offers at? And what does the price look like in terms of that general structure and market cycle that we just discussed? And then we look for patterns within that structure, and we look at the order flow. Once we like a pattern within a price action segment within a structure, we look at the patterns the market is forming: bullish patterns, bearish patterns, reaccumulation patterns, etc. And we start to look at the order flow in the tape to verify the strength and enter our trades. Ultimately, tape reading is the last sort of magnifying glass to make sure we pass the smell test. So Wendy's, of course, the mascot of the accumulation distribution price cycle, where you have big operators in the market who accumulate early, create uptrends through supply and demand imbalances, and those are the early adopters. You have early adopters in the accumulation phase as well as the uptrend, and then you have your early majority, and then market typically tops out. Sometimes it pulls back and continues higher. Sometimes it tops out and reverses completely. If you were buying Microsoft in February or March of 2020, you are very familiar with the distribution cycle or the NASDAQ itself, right? And then you have a downtrend, and this continues on and on and on in the markets for the rest of time in a fractal manner, meaning it happens on the daily time frame, on the weekly time frame, on the monthly time frame, on the hourly time frame, and all the way down to the most minute time frame you could possibly trade. The importance for us as traders is to recognize the phases of the market we're in and try to align the time frames so that we're trading accumulation and markups for uptrends in both monthly, weekly, and daily timeframes, so as to really capture the most efficient and the highest amount of market participation. A lot of swing traders trade timeframes that may be much smaller than big hedge fund managers and so on. So we want to ride that wave. We want to ride that order flow, and to do so, we really have to make sure that we obey the importance of multiple timeframes. This is just a snapshot here of the Wyckoff logic, right? You have price, sentiment, time, and volume all working together to accumulate, to mark up, to distribute, and mark down, right? So what does that mean? It means that we recognize the different phases of the market and the different phases of whatever instrument we're trading to determine when you're going to go from an accumulation phase into a markup phase. And accumulation, why does accumulation go from accumulation to markup? Well, typically, right, price rises out of an accumulation because you run out of supply, meaning there are not enough shares to buy at the indicated price. And when you find a strong supply versus demand imbalance, it causes breakouts, it causes markups, it causes signs of strength and new trends forming. And so we like to be in either accumulation phases or what I call reaccumulation phases. So at the end of a big run, sometimes you'll see a stock wedge out or form a platform or form a base or form an inverse head and shoulders, right? And that's how we're going from structure into pattern. And we like to enter at the point where we have a clear demand to supply imbalance in order to capture that big momentum move. I'm typically what most people call a right side of the chart trader, meaning I like to buy stocks that already have a lot of momentum in order to buy them through the breakout, rebuy them as they go up, build big positions, and sell them for big gains. So that's typically the strategy. And just to conceptualize here, right? On the right side, you'll see a bit of a pyramid here. This is really important, right? Context. We always want to analyze the context that a particular issue or a particular stock is in, right? Are we in a bullish context? Are we in a bearish context? Are we in a neutral context? Then, say we figure out a stock, like say, for example, OKLO in the past 2 months was in a bullish reaccumulation context. And, through $60, we alerted that as a swing trade idea, right? Structurally, it was very tight. It had gone up and held higher lows. The price action confirmed. So we derived a roadmap from that context, structure, and price action in order to derive our ultimate bias. So in terms of the steps, the cognitive steps we go through step one, context analysis, right? We identify the current context, and context is not just trend, right? It's trend, it's sentiment, it's market strength, it's multi-time frame analysis, right? And we perform a real-time analysis on that and analyze the variable, step two, and then identify the actionable price areas, right? The price areas where we feel like there's not going to be enough supply to meet demand and create a big move. So step four, we extrapolate those trade ideas based on scenarios, and finally we take action. That's what I call the procedural OODA loop, right? And so here you have in the next slide, you'll have, for example, a quick line chart of an accumulation on the left that leads to a recumulative structure distribution. A big markdown here when you hit a new pivot low on the right side of that distributive upthrust, a second redistributive upthrust, and finally a third distribution that leads to new lows, right? So you'll see that the circle here, it has actionable position, context analysis, real-time analysis, actionable price areas, and trade idea extrapolation. They all lead to that trading plan out of that bias that lead us to really take ideas with a whole lot of conviction. So I categorize trends by early trend, mid trend, and late trend, right? Typically what we like to do is enter either early or mid trend, okay? And sentiment is really important here, right? Like we traded both in the day trade room as well as the swing trade room, a lot of quantum names, a lot of the nuclear reactor names, right? And a lot of those we caught early trend, but sometimes you have an early trend, leg one that forms, and it forms a new reaccumulative structure, and we're not afraid to re-enter a mid-trend. And I have a couple of examples of that to go ahead and capture that measured move up the second leg, right? I categorize the phases of the markets as phases 1 through E. This is very Wyckoffian, right? Typically, phase D is the phase out of a consolidation that has that initial sign of strength that I'm on the wrong side. That initial sign of strength that overpowers the overhead supply in a consolidation, takes you higher, comes back, retests, gives you price acceptance, and creates a trend, a strong markup or a trend. And that's phase E, and that's typically where we live as swing traders, and that's how we identify the trends. And I'm going to go ahead and just showcase some examples here. We're going to start with UNH. UNH we called out in our day trade room as a swing. Sometimes I got to throw my day traders a bone. You know, day traders are like drummers. They're spazzes. If you don't point them in the right direction, they're going to be all over the place. Trust me, I'm a day trader. I know. So UNH, we took in early September as it broke our buy zone through 309. And the reason I wanted to have this chart here is because it's a perfect example. Of the markets forming a reaccumulative right side. This is, you know, pattern wise, this resembles, or structurally, this resembles most likely an inverse head and shoulders, right? So you had a big markdown in July with a shakeout. I labeled it here, final shakeout. And then beyond that, we come in and in the first 2 weeks of August, we come into 314.42. We pull back, we tighten up a base, and then the pivot at 309 was the failed high on the prior day. We set a buy stop through there with an add through the pivot high off the gap at 314.42. And we set a target at 374.71 and a secondary target at 404, which is right near the 200-day moving average. And as you can see here, UNH popped explosively. And the reason it popped explosively was a mixture of sentiment, right? Warren Buffett had gotten into the name, but also all the shorts who were trapped were buying stock along with longs who were breaking the highs off the pivot highs on the gap. And so that created a tremendous amount of buying pressure. And that's the kind of supply to demand imbalance that we look for. UNH continued to rise, formed a reaccumulative bull wedge, right? That's both pattern and structure, and then hit our target there around September 11th, I think, or September 10th, something like that. And we're continuing. This trade's still active. We're continuing to ride this channel, and we're looking for 386 and then potentially 404. So this is a prime example here of how we use both market structure and price action to really find those key inflection points in price where we feel demand is going to completely outstrip demand and send prices roaring higher. This is CNC, which we did alert in our room here. CNC is a trade we're still in. This is a fantastic trade. Right around August 13th, we hit a pivot high at 30.37. You'll notice the volume really wanes out here, but you start to put an equal low after equal low, and the price action around September 8th gets very, very tight. So we set a buy zone at 29.60 with an add at 30.17. The price gapped tremendously on the following day. We caught basically in 3 days a 20% move. We trimmed half on the climactic gap, and as the gap curled on the 24th, we added at 32.99 and hit our target at 38.46 after price acceptance there at 37.75. We're currently still on this trade, and we're looking for a secondary move now to $50. So this is a great example of how you can capture that great push as the shorts get squeezed, and price will no longer go any lower, and you see price action compress into a very tight range. There's a battle there. I like to call it a monkey knife fight as a joke, but really it is a battle between buyers and sellers. Shorts trying to take CNC back to lows, longs holding a steady bid there in CNC right under the pivot lows in September, and finally buyers outwitted sellers. They completely overpowered them, and you had that massive move in CNC, which had been battered due to news regarding the healthcare sector. This is Caterpillar. Why isn't this marked up? The green line is our buy zone right there in mid-September. There was a strong catalyst here, which is the big beautiful bill, as it's called in quotes. is going to attract a lot of manufacturing onto repatriated American factories. And so that, in combination with the fact that in a lower rate environment next year, we forecast that a lot of new home construction is going to be taking place. So we really liked that. Oh, sorry, I'm on the wrong chart. There it is. We really liked the idea of a home construction and an infrastructure boom with infrastructure construction and factory data center construction, et cetera. So we really liked as the W tightened up into that 441.50 pivot. We really liked the idea of Caterpillar to 450 and then 475. You can see Caterpillar has now formed the channel. It's pulling back a little bit. So I'm probably going to re-add on the first retest of the 21, and I'll be looking for a move to 574 and then potentially 620. The chart looks fantastic there. I'm a big fan of that chart, and I think we still have a lot of nice upside there. And an old Caterpillar, not a name people usually get super excited about. I'll grant you that. Like you don't brag to your friends at the bar that you traded Caterpillar if you're a day trader usually, but as a swing, it's acted phenomenally well. All right, so this is UMAC, Unusual Machines. UMAC was a base breakout. We added to that trade in mid to late September. We really liked on UMAC. You see that green line? That's basically a W bottom neckline break through 1191, and we were looking for 1440 first. That was a 20% gain, and then our secondary target was 1740, 1750. We took a quarter there for a 47% gain, and I was looking for a pullback and a move back to or through $20. Unfortunately, there was some negative news in this industry, and you see here on the October 15th, you had a big turnaround bar. So we trailed out for approximately a 20% profit. We had raised our stop to break even, so it was a free trade. But the idea here was capturing as much momentum in as little bit of time. And you can see here the enormous momentum you caught on the breakout there through 1191 as the stock advanced very quickly for a 47% gain or so. It was a fantastic move. Next, we have another example here of the stuff we typically do, the kind of shenanigans we're up to. HOND is a SPAC. We got sort of Kramered on this one, but it was still a really nice move. Let's see here. 1 second. I'm just adjusting my screen. Sorry, guys. So HOND was a really nice swing. We had a really tight narrow base with a buy point of 1230. The green line denotes the buy point there at 1230. I really liked HOND for a big move. I thought it had at least 40-50% move there, and we took some profits into $15, and ultimately took it off at 18.29. Jim Cramer came out, totally bashed the name. It looked like it was going to come in, so I just took profits up 51.75%, which I thought was pretty good. Later, it continued to go higher, and we, in the day trade room, we absolutely destroyed this one. But that was the swing trade on this one, and it was very profitable. We took size. It came in the first week of October, allowed us to add size nicely around the 15 handle, and we sold at 18.29 there. It was an absolutely gorgeous move. Next is CDTX. This one was great. A pleasure to trade. CDTX was in a reaccumulative context, meaning it was already in an uptrend. We bought it through as price action really narrowed, and CDTX hugged the 21-day. We bought it through 65.47 with targets at 85 and a quarter and 90, and then 100. And we just sold each of our targets into strength. It was a beautiful trade. I think this was at least a 50% gainer, if I'm not mistaken. An absolutely beautiful move on CDTX. On this one, we were really looking at the sentiment around the biopharmaceutical sector, which has been very, very strong. So from 65.47, it was about a 52.5% gain into that $100 target. So not bad for a few days' work, right? We weren't in this trade for very long, as you can see. It was maybe 2 weeks here to the time we sold it. 13 trading days. So I'll take that with a cup of sugar. Next, MRUS. Maris NV had been in a beautiful uptrend. And Maris, what I liked about Maris, and I like this a lot, was that it had base from June to August and a nice rounding bottom base. And then from August to September, it got very, very tight. You had a bunch of shakeouts of the 21 that failed to take it lower, and we decided that it was really worth a shot. MRUS was really worth a shot through 69.10, I believe, was the buy zone, and we took it long there. 72.75 was the first target to just finance our risk, and then we took it to 80, and then got lucky. We seemed to get lucky a lot, and sold it through 95 on the buyout. A absolutely blowout trade. We weren't in it for very long, about a week, and just a massive gain there in just a matter of days on MRUS. The stock was trading like it was a buyout candidate, and that certainly proved to be true. Next, we have a Canadian Imperial Bank. This was a gorgeous move. I really like the strength of the banks, specifically the Canadian banks in June and July. We saw a beautiful buy level through 68.45. And you can see a Canadian bank had been in an uptrend since April, and we were looking for that reaccumulative thrust higher through 68.45. We took half through 72, and then on CM, I think the chart's cut off there. Yeah, no, it's fine. Sorry, and then we reached a target there at $80.50 for a really nice chunky move there. We took it off because it was the measured move off the lows. It's about a 19% gainer, I believe. Just rinse and repeat, as they say on Canadian Imperial Bank. AMSC, American Superconductor Corporation, another reaccumulative type of setup here. You had two legs higher, and I really, really liked the way AMSC was reconsolidating after its first leg. I thought to myself that AMSC was most likely going to break the prior pivot high off of a cup at 37.98, and we took it long into what was that? We took it long into the target was 75.50. No, sorry, I'm in the wrong chart. Sorry. Target was $53 and then $60. Just a gorgeous technical move there on AMSC. In a matter of weeks, we had about a 57% profit on that trade. Absolutely gorgeous. It's been the third quarter of this year with the strength of the market was absolutely amazing. Next is Black Sky Technologies. I think we bought this one in June, I believe. BKSY, quite a mover, very, very volatile name. We took it through 13.24. and sold the target there into 2180. Now this isn't a right side kind of a chart trade, because obviously you can see here when we took the breakout, it had already come down quite a bit. But what I liked about it is that it had come down, built a sort of a rounding bottom type of accumulation structure, and then started trading in a very nice tight narrow range with a shakeout in early May. And then finally, when it started to look like it was going to break 313, we set a buy stop 13.24 and sold it into 21.98, $22. Sorry, 24.80. My bad. 24.80 for a about a 65% gain. Beautiful move. Here's some honorable mentions. And I add them here as honorable mentions because I alerted them. But for some reason, this is my Murphy's Law. I'm either away from my desk for a couple of hours, or I'm out for the day and I'm not watching the market, so I cancel the order. On PAS, Pan American, we were predicting a very strong secondary move in silver going into late July, August. So we alerted 2966 as a buy zone, and you can see here it broke out with massive volume. Once it hit price acceptance over 30.80, there was no stopping this thing, and it hit. A bunch of our traders took this one, a very juicy 34% move in about 3 weeks. It was absolutely gorgeous. This is a KGC, another one I alerted in the room. A lot of our traders took this one. Buy zone 1604, hit targets at 2167 and 24. Just obviously, we pay a lot of attention to the sector strength, right? We try to figure out what sectors are really hot and performing. This has been a very narrative-driven market for the past year, and it hit targets 1 and 2. $24 was hit in mid-September for a 51.6% gain on that move. And finally, Oclo. This one was hot to trot. Now, I have to say I made a small fortune day trading this one for the past 2 months. However, I had gotten up from my desk. I'm never going to remember. I'm never going to forget this breakout. It just hurts my soul. But this is another honorable mention that I missed the original 77 break, and I just day traded it for 2 months. It was great for my P&L, but I canceled my buy stop order because I was away from my desk, and it went to 77. You had an added 97, and it hit our $131 target in under 2 weeks, I believe, for a massive gain there. It was about 69% gain. One of my co-moderators, Michael, I think had over 200% gain on this trade. Absolute monster trade for him, and I know a lot of people took it with him. So it's been a crazy year. It's been absolutely wild to see this kind of momentum in the markets. And we've built a room where our traders not only get to experience a sort of a diary-like experience of a trader, where we try to put in as much detail about what we're doing with the trade. We post the charts for the trade, entries, exits, stops, of course, and then do video chart roundups of the trade. So it's a very interactive experience, and it's been very profitable for a lot of our members, of course.